Only hours after delivering the speech on the world stage in Davos, the U.S. president now says there's some sort of agreement on Greenland. Trump posted saying he won't impose the tariffs he threatened on Europe. Officials in Denmark and Sweden are also saying some sort of understanding has been reached. Let's go to BeiChen Lin on this, head of Canadian strategy at Russell Investments. Thanks for joining us today. Markets started climbing as the news broke about 2 o'clock Eastern time. Is this a sigh of relief for investors?
No problem, Marella, and thanks so much for having me. So I think when it comes to any sort of situation, whether it's tariffs or something else that can cause volatility, markets, generally speaking, do tend to get a bit of a relief rally when you see a bit of a resolution of uncertainty. And of course, we are still very early days. The situation is fast moving. But I think from the market's perspective, the markets are breathing a little bit of a sigh of relief that the tariffs that were previously discussed are now no longer going to take effect in February. And I think another thing that's important to understand is I think this episode that we've seen recently is a reminder to investors of really the importance of having a longer term focus, of staying disciplined. And yes, it's true that sometimes we can see volatility resurface, as we did, for example, recently with these events related to Greenland. But ultimately, from our perspective, we think that investors benefit from really staying focused on that long-term objective.
Okay, so you're not sort of playing the investment strategy of buying when everybody else is selling off, trying to keep the long view?
Well, so from our perspective at Russell Investments, what we like to do is we like to identify the potential pockets where we think the markets have become so dislocated, so one-sided. And you're correct that we did see the market sell off yesterday, with the S&P down about 2% at one point yesterday on the back of that news related to some of these tariff developments. Ultimately, for us, it is really a holistic evaluation. So what we're doing is we are maintaining a strategic stance. We're maintaining that long-term perspective, but then also looking for those opportunities where you might see the markets get a little bit too dislocated and looking for those tactical, nimble opportunities to potentially step in should that volatility present an opportunity.
Okay, so before just a short time ago, this deal was put out online through a post from Donald Trump. We had the U.S. president talk about Canada not being grateful enough to the U.S. On the whole, how would you interpret the early market reaction to Donald Trump's speech?
Well, I think the important thing to remember in terms of the context of Canada-U.S. relations is obviously the CUSMA agreement, the Canada-U.S.-Mexico agreement, is up for negotiation this year. And while we are generally optimistic that there will be an ultimate deal reached on CUSMA, there can be a bit of a nonlinear process where you could see twists and turns there. So we might see some, developments where both sides are trying to get what they think is in their country's best interest. And you might see both sides have certain types of demands that they're making of the other country. But by and large, we're generally optimistic that, look, at the end of the day, Canada and the U.S. have a very tight-knit trading history. There's a lot of commerce that gets done between these two countries. The U.S. is Canada's largest export destination. So we are optimistic that ultimately a deal will be reached.
You see some value in Canadian bonds. So what's behind that?
Great question. So right now, if you look at the 10-year Government of Canada bond yield, it's about 3.4%. Our estimate of fair value is closer to 3.2%. And part of the reason for that is because the markets right now are pricing in, call it a 50% probability of one rate hike before the end of this year. Now, from our perspective at Russell Investments, we still think it's too early to be thinking about rate hikes in Canada. And really, one of the key measures that we've been focused on is what's called the output gap, which basically looks at where is the Canadian economy today versus what is its longer-term potential. And right now, we see the Canadian economy continuing to be softer than that long-term potential. And so traditionally speaking, when you have a situation where the economy is performing softer than that longer-term potential, and inflation is still pretty close to the Bank of Canada's target, there's just no need for urgent rate hikes. And in fact, we think that there's even the possibility of a rate cut at some point this year, depending on how the Canadian economy evolves. And so for that reason, we think that Canadian government bonds play a key defensive role in investors' portfolios.
All right, I do have to leave it there. BeiChen Lin, thanks for joining us. Appreciate it.